The Fox News decision desk can now officially project that Donald Trump will become the 47th president of the United States.
In the end, it wasn't close. It was comfortable.
Frankly, this was, I believe, the greatest political movement of all time. There's never been anything like this in this country and maybe beyond.
And the stock markets loved the certainty.
We're looking at record highs in all these major averages. That's a big move. And when you look at smaller cap stocks...
But will the Trump trades carry on?
The initial market reaction to the news was very positive on the day, and then it sort of did peter out a little bit.
And how are countries reacting to those possible Trump tariffs? Welcome to the NBR Podcast. I'm your host, Simon Shepherd. It's America first, the rest of the world second, and the markets loved it. But now that the sugar rush of certainty is over, what next? Well, to help us understand why stocks soared, why inflation and interest rates might go up, and whether we're heading for trade wars, we've got a panel. Trade expert Stephen Jacobi from the International Business Forum, Zoe Wallis, investment advisor from Forsyth Barr, and Felix Fok, director of global equities for Jarden. All right, so let's kick this off with some general observations. Felix, you first. Can you put into context how big a surge share markets had after Trump's victory?
Yeah, particularly the US market, which is the most obvious and direct beneficiary. The US stock market is about 3% or so in the free trading session since Tuesday. And, that is positive, but by no means, to the extent which would imply a massive surprise. Clearly, the markets have been positive and running up into it.
Yeah.
But the fact that the US stock market is up is clearly indicative of this clearing event where there's now a clear victor from the election. And one thing that I guess some investors may have been fearing was a very contested or potentially chaotic outcome, which has been eliminated. But it's also noteworthy, other stock markets outside the US, how they reacted.
Yeah.
In reality, not that well at all. It's pretty muted.
Right.
So there's this ETF in the US that looks at the world global markets excluding the US.
Yep, and
in fact, that's down slightly over those 3 sessions.
All right, so in those 3 sessions. So, Zoe, do you think we're going to have more of the same? I mean, are we still going to see more buoyancy from the US markets now that we're entering another week?
Yeah, look, and obviously we're kind of getting the dust settling a little bit. It was interesting to see the initial market reaction to the news was very positive on the day, and then it sort of did peter out a little bit, particularly if you look at the bond market reaction to that. Actually, yields jumped higher about 17 basis points in response to the news in the terms of the US 10-year Treasury yield. Those have almost retraced all those gains. So we have seen a little bit more sort of perhaps moderation coming into the market at the end of last week. It's going to be really interesting to see how things go this week. But I think Felix's point, at least around the removal of uncertainty, is a positive for markets because it's been hanging over our heads for at least the last sort of 6 months, really since the beginning of the year that this was coming. A
clearing event, as Felix said. Yeah, a clearing event. But what's not clear or is clear is tariffs, right? So, Stephen, initially, what has been the reaction about the promise of worldwide tariffs by Trump?
Well, I think there's quite a lot of consternation around the world, not so much in the United States, clearly, but certainly amongst the United States trading partners. There's a lot of speculation about what might or what might not happen. To be perfectly frank, at the moment, we just don't know, and we won't know until after the 20th of January. But there are a lot of scenarios being put forward, some alarmist talk, but also a lot of positioning, pre-positioning. Which you've seen in the various, comments that have been made by leaders around President Trump's re-election. So, as if they're all trying to work out how can they best present themselves, in this new context that's coming forward.
Right. Okay. So initially you've got to say, I've got to present my best face towards the new president, but also I've got to plan for the worst at the same time, I guess, in terms of trade.
Yeah, well, that's probably very good advice.
Okay. We'll come back to that because that sounds a little bit gloomy. Can I just drilled down a little bit on that stock market result. Okay, so you're saying like was it up 3% or something like that? But some stocks in particular just went hell for leather, didn't they? Like we're talking about finance, tech, and I think there was one banking, and also crypto as well. We'll talk about that in a moment. Sure. So Felix, why those particular finance and tech stocks? Why did they just go up so much?
Yeah, interesting. You mentioned tech in that same sentence. So as an investor, I clearly understand why financial companies in the US, especially if they're domestic banks, are likely to benefit here. Firstly, you're likely to see interest rates stay a bit more elevated than before because of this expectation of tax cuts, consumption locally perhaps, but also inflation staying elevated. So I can absolutely get why financial assets will benefit. But when it comes to tech stocks, these are very international companies. And, with tariffs and potentially, countermeasures by other countries, as well as the fact that Trump himself has a media company, so this particularly impacts Google and Facebook, is not as clear to me why they will be a sustained winner in Trump 2.0. But I suspect it's because most investors immediately following results say, I need more US equity, so they buy an index. And guess who's big and heavy in the index? All of the tech stocks.
All the tech stocks, okay. One particular stock, Zoe, is, I guess it's a political stock or it's a meme stock, and that's Tesla. Like, it had a 28% bump since the election. But Trump doesn't even like EVs.
Yeah, look, I mean, the relationship between Elon Musk and Trump has been received a huge amount of media attention over the last few weeks. I think there's a perception that, with Musk very closely associated with Trump and the new administration, that the company will stand to benefit from that. Whether that is actually reality or not remains to be seen, depending on where Trump decides to go with a lot of his policies, as you allude to as well. The other interesting thing, I think, just following on from your previous point, is looking at your small caps versus your large cap stocks. There's actually been a lot of the smaller companies in the US that have seen a really strong tailwind. So I think this, Russell 2000 index, which captures a lot of those smaller US corporates, is up sort of around 8.5% for the week, which was bigger than the sort of headline gains. And part of that is, again, that those companies are expected to be insulated from some of the more detrimental trade winds, but should benefit from lower US corporate taxes.
Right. Okay. And look, I just got to tick this off before we move on to the sectors which didn't do well. Cryptocurrencies, another high over the weekend. Why is it on such a tear?
Look, I think Trump's made it pretty clear, especially during the campaign period, that he's in favor of crypto. He sort of embraces the technology and innovation aspect. Yeah. The hope here in a very sort of blue sky scenario is somehow the US will consider crypto a bona fide asset and even have some of its reserves or have other countries, have their national reserves take a little bit of crypto.
Really? In the national
gold.
Wow.
That is the blue sky scenario. No, I think it's very far from getting there. But it just legitimizes the asset class.
Right, okay. And the fact that the Trump family has actually got a crypto company, Zoe, nothing to do with it, probably.
No, I'm sure nothing. I mean, you think about the Trump trades going in, crypto was very much going to be one of those beneficiaries as well. And we've seen that exactly play out in the wake of things.
All right, let's talk about the sector that wasn't happy or sectors that weren't happy. And I guess, Stephen, they are the sort of trade-related ones. I guess one of them was soybeans, and I was trying to work out why soybeans, but I guess that's a trade indicator or a tariff indicator, that kind of sector.
Not that I know a lot about the soybean industry in the United States, but I suspect they're more concerned about the downstream implications of an American decision to increase tariffs and the sort of trade actions that can give rise to amongst their trading partners and the trade diversion that happens as a result. Because it's not just, higher costs for consumers, and it's not just, reduced market access to the United States. It's what everybody else does and the way trade might flow as a result. And so, it is one of the, nightmare scenarios that we see quite a lot of trade diversion, and we see even trade wars breaking out between different parties, some involving the United States, maybe some not involving the United States. and a considerable amount of instability. Of course, I come back again, it's all speculation. We don't really know. Just bear in mind one thing. Of course, President Trump has said he's going to appoint Robert Lighthizer as the US Trade Representative, who was the USTR last time. So we do know a bit about him and the way he might react.
Okay. And tell me, how might he react?
Well, he is a person who believes passionately in tariffs. And in fiction, he made a career for himself as a lawyer defending anti-dumping actions for the steel industry. And that was one of the early beneficiaries of President Trump's attention in his last term. He's been no friend of the WTO, the World Trade Organization, that sets the rules and the playing field, if you like, for global trade.
Right.
So that his stance is generally one that's much more around America first and around regulating, protecting trade. So, that's what worries the American exporters around the world, and why it's not just a simple thing to decide to increase tariffs in the United States.
Yeah, no, it affects the global economy. Okay, so let's talk about New Zealand's. Let's drill down to how it affects us. Okay, Stephen. So 10 to 20%, if it comes to pass, what does that mean for New Zealand's trade to exports to the US?
Nothing very good, I'm afraid to say, if that is in fact what happens. A 10 to 20% tariff across the board, not directed probably at New Zealand necessarily, but we get caught in the cross, would impact on our $8 or $9 billion worth of goods trade. It would result in up to $1.7 billion worth of tariffs. It would affect beef exports, wine exports, horticulture, dairy exports, and cause that massive trade diversion that I've talked about. Quite a bit of that trade probably would become unsustainable in the sense that it would be replaced by American producers or anybody else who manages to get exemptions from that. This was the thing last time.
Right.
The United States exempt a lot of its free trade agreement partners. As you know, despite trying for a decade or more, we couldn't get an FTA with the United States. And so we're somewhat unprotected in that market.
And can I just ask, across the Tasman, what is their situation in terms of exporting to the
No, they
States?
got an FTA back in 2000, and that enabled them to get out from underneath some of the punitive tariffs that were imposed last time, including, for example, on steel and aluminium, which continued to affect our exports.
Okay. All right. Just one last question then. Where should New Zealand pivot if this comes to pass?
We should avoid rash actions. I think we do need to focus on putting our best face forward to the United States in this difficult situation. We do. I mean, we present a very small target for the United States, if you like. We have friendly relations. In fact, they're more than friendly. They're very warm and getting warmer. So
Yes.
We've got to build relations with the next government coming in, the next administration. But we've got to do all of that while continuing to exploit our other export markets. And the critical one there for us clearly is China. And we cannot afford right now to be alienating ourselves from the Chinese. I know there's a whole set of considerations about that, but the Chinese are still big buyers of what we have to sell. And our other markets in Asia, of course, and our markets in Europe.
So that's a lovely balancing act that we have to do now. That's great.
We're good at it.
Zoe, are there any sort of trepidations about what this could mean if it comes to pass for the effects on the global economy?
Yeah, and look, just to carry on, the first point about the impact on New Zealand as well, it's probably worth noting that the US has been our biggest growing export market, but also it's been one of the positives that's been, historically New Zealand's had a very high concentration on trading exports to China. Actually, the US has diversified away slightly from us on that heavy reliance. So the tricky part, though, is obviously that, the US is talking about a 60% import on tariff on all goods from China to the US, which is going to hurt the Chinese economy. There's a wide range of estimates about what that does to Chinese growth, but all of them are negative, basically. And so with China being our other biggest, by far and away our biggest export destination, that does raise concerns about the implications for NZ export demand in China as well as out of the US.
Right. Felix, do you see any other risks, or are they all sort of, covered within that big basket of just, China and America?
I think just a little bit more on China is their own stimulus action, which we heard more about on Friday. So it's 10 trillion renminbi. Again, the variable here is over how many years and how that stimulus will be implemented. I think the takeaway point is China has enough levers in of itself, given its domestic economy, to try and do something to offset the negative impact from tariffs. And that's a little bit of a silver lining, a ray of hope. But besides the talked about trade, import, exporters, I think it's mostly an indirect impact for New Zealand. Again, if our currency was weaker, it would help that negative impact on exports.
Yep.
If we're importing high interest rates, because the US bond market effectively starts pricing in either higher inflation or real yields, then it would be a bit more negative to New Zealanders.
Right. Yeah, let's talk about interest rates, okay? And I'm just trying to lay it out for the lay person, because how is it possible that, the stock market's saying, yay, we've got certainty, and yet we're probably talking about maybe interest rates not coming down as quickly, or inflation actually, not coming down as quickly, or even going up in the US? Who wants to take that one?
I can take that.
Go for it, Zoe.
Yeah, look, so what we're talking about in terms of Trump's policies that are currently on the table, tariffs typically get passed through to your end consumer. And so that basically means that inflation in the US is very likely to go up, and there's a very clear consensus around that if Trump implements his tariffs as proposed. That obviously means that the US Federal Reserve is likely to have to keep interest rates higher on average than they would otherwise in order to combat that inflationary pressure. The flow-on effect, I guess, for us as well is worth keeping in mind in New Zealand is that while our short-term interest rates, so things like your 1 and 2 year mortgage rate, might be largely set by what happens with the official cash rate here in New Zealand, when you start to look out the longer term, sort of 5 to 10 years, actually we have a really strong correlation with what happens with US interest rates. Yeah. And so what we're seeing already is actually that our local interest rate curve is getting pressured higher on the back of the moves we've seen in the US last week.
So the New Zealand, mortgage owners going, yay, finally we're going to get interest rates come down, but hang on a sec. Trump's got in, I may have to pay more. Is that a possibility?
Well, I think to Zoe's point, the mortgage market is mostly priced off the front end. I think the cost here would be the unpredictability when you do renew and roll over your mortgages down the line, because that environment 1 year, 2 years out may be a bit more inflationary and therefore more costly.
There's also, and just Zoe, just quickly on this, what about the relationship between Trump and is it Jerome Powell, who's the chair of the Federal Reserve? Jerome Powell says he's not going to quit, but I don't think they have a great relationship, do they?
It's ironic, actually, because Trump actually put him forward for nomination in 2017 to the position he's now in, that Trump is very keen to get rid of him from. Look, Trump's been pretty vocal in terms of calling for lower interest rates in the US. He has made various sort of noisy threats about trying to get him removed, but legally, as Powell came out in his press conference and said very clearly that's not possible, and that Powell's been very vocal in that he won't stand down. His term comes up for renew in 2026, though, so that might be the tipping point.
One more quick question on global equities, Felix, and then we'll come back to a sort of a wrap-up. As an investor, is it all just like, I just got to buy US equities now?
I think that's what it looks like, prima facie, especially US domestic companies. I guess at some point the market will be a bit more discerning, again, rather than just buying that broad-based S&P 500, picking up a lot of international companies, which actually could possibly get hurt a little bit. Yeah. They will start talking about the smaller cap domestic companies that Zoe mentioned up front.
Look, I'm just going to wrap it up. I want to come back to you, Stephen. If we look back at Trump's first term, when it comes to like global trade positions and tariffs, are there any lessons or trends that can help with navigating the next term?
Well, I think the biggest lesson we can learn is not to take anything for granted, basically, that, surprises are going to come along the way. But we do know some things. You recall that on his first day in office, President Trump withdrew from the Trans-Pacific Partnership Agreement. I think we're going to see some big things like that as soon as he takes office. I'm talking about after the inauguration on 20th of January. Obviously, the Paris Climate Change Agreement could be one of those. But we know that other things are going to evolve more slowly. I think the big one there is probably US-China relations. I wouldn't be picking myself anything drastic to happen in early days. I think we have to see how that works out. So I think there's this mix of some big ticket items and then some slower things. I suppose the appointment of Robert Lighthizer as USTR gives us some measure of the direction of the way things may travel. He's not an unknown quantity, and he knows New Zealand very well. So we have a basis on which to build relationships that are going to put us instead to making ourselves as, friendly and Hobbit-like as we possibly can to the new reality in the United States.
That Hobbit trade strategy from Stephen Jacobi wraps up this episode of the NBR Podcast. Links to audio used are in the description. Thanks to content producer Jake Latham and creative director Michael Hickmott. For early access to new episodes, subscribe at nbr.co.nz. Next up, a star is born in Wellington. We are talking nuclear fusion. I'm Simon Shepherd. We'll catch you then.